Now the part of the show where I list 3 things that I think individual investors need to be focusing on before they make their investment decisions. A very popular part of the show. I get questions on this list all the time. Earnings season with big tech taking center stage. Yes, we are in the midst of big tech earnings. We just had earnings from a big tech name, not a Mag 7 name, but AMD reported earnings after the bell last night. And boy, is it getting hit hard this morning. We'll touch a bit about why that is, but we're going to get 2 big earnings from Alphabet, Google, as we all know it, and we're going to get earnings from Amazon, all within the next 24, 48 hours. And that goes along with the earnings that we've already received last week from the likes of Meta, Microsoft, Apple, Tesla, all those Mag 7 stocks. Number 2, number 2 idea as part of our list to focus on for individual investors, most market gains are concentrated in a few places. And we're kind of used to this because for the longest time we said all the gains are coming from the Mag 7 stocks. Well, not anymore. They're coming from other areas of tech. And a lot of people think that maybe these are too stretched, overblown. And maybe, just maybe, that's why people are still talking about this whole idea of a bubble bursting. But, I'm going to talk about why that is not the case. Software is not one of the hot areas of the market. And I think it's important to talk about software stocks. We saw Microsoft report earnings. Yes, Microsoft is a very diversified company, but of course, also software. But we're seeing software stocks, software as a service. That's what they offer. Names that I'm going to show you that are really taking it on the chin. And some of those names for no reason. So another thing to focus on if you are an investor. So let's move to our first topic, earnings season, and big tech takes center stage. And I still get this call for, Allan, are we in a tech bubble? I still hear about the tech bubble. And maybe it's just because the media is always a little bit behind in things. Maybe the retail investor in general is always zigging when everybody else is zagging on the institutional side, or on the the savvy or the smart money is moving one way and the retail investor is moving another. I'm not so sure, but I still get the odd question about a bubble. And well, let's show you our first chart, Magnificent 7 index. We can put it up here. Well, does that look like the chart of a stock or a bunch of stocks that are in a bubble? You could make the argument that these stocks have gone nowhere since the end of September. They've been pretty much up and down a little bit in a trading range for quite some time. Now, there's been one Magnificent 7 stock that has done extremely well, and they're going to report earnings shortly. And that is our next chart, which is of Alphabet. And it's funny because Alphabet was a stock that was left for dead. Many people said, oh, search is going to be eaten up by software, by Chat GPT. No one's going to do Google searches anymore. Well, guess what? They have Gemini. Alphabet has Gemini. Gemini 3, when it came out, it proved to be, for many, better than whatever Chat GPT had. I think ChatGPT called it a code red. OpenAI called it a code red, whereby they needed to go back to the drawing board and improve ChatGPT to compete against Google's Gemini. And so here we have it, where Alphabet comes out with Gemini 3.0. It turns out to be fantastic, and Alphabet has gone up ever since and really doing extremely, extremely well. But they've been pretty much the only Mag 7 name that has done well. We'll see what their earnings are. But if you look at our next chart, Amazon, again, going back to this idea of a bubble. Well, where's the bubble? Has Amazon done much in the last year? I don't see it. It's been choppiness at best. It's been hovering around 235, 240, maybe gets below 225. It really hasn't done an awful lot. Our next chart, this is the one I mentioned a little earlier, AMD. AMD reported earnings last night. Fantastic earnings. Beat on the top and bottom line. And on top of that, took up their expectations for this upcoming year, took up their expectations right across the board. Guess what? Their stock is down $40 a share, or about 17% when we came on air this afternoon. Why is this happening? Well, perhaps it's because AMD was riding a pretty strong wave, as you can see on the right-hand side of that chart. It kind of went up quite a bit into the print or into the numbers last night. Or perhaps people are just getting tired of the Mag 7 names or big cap tech names. And yes, AMD is a big cap tech name now. It used to be a small tech name. Now it's much, much larger. AMD, for those of you that don't know, they make chips for gaming. They make chips for really AI, and that's CPUs, GPUs. That's what AMD does. And it's just interesting. Again, people talk about this tech bubble. Well, I don't see it in AMD. And in fact, the more people talk about a tech bubble and expect something to burst, the more unlikely a tech bubble will burst, because a lot of these big cap tech names are not doing that well, but in terms of share price, but they're all doing well with respect to earnings, top and bottom line, whether it's a Meta. Microsoft last week reported great earnings, and because their cloud growth, which was their Azure, it was expected to grow about 40%. Well, guess what? Microsoft came in with growth rates of about 38%, 2% below what they were expecting. Stock sold off. $357 billion came off the market cap of Microsoft. Is that justified? I don't think so. Stock is down over 20% from its highs. Perhaps that's a name you want to take a look at some point. So corporate earnings season focuses on big tech, and the focus will continue to be on big tech with and over the next couple of days with Amazon and Alphabet reporting. Our second topic to focus on if you're an investor making some decisions over the next couple of weeks is this idea of market gains are concentrated in just a few areas. What are these areas, you wonder? If they're not the Mag 7, what are these areas? Well, here they are. Number one, storage. We have a few storage companies to tell you about. Our first chart is one of SanDisk. What do you need storage for? Well, you have all these data centers, all this AI, all this information. It's got to be stored somewhere in the cloud or wherever. That's where names like SanDisk come in. Look at that chart. Unbelievable. At one time this year, and this year is only what, 5 weeks old? SanDisk was up over 1,000% in the last month or two. It's been an unbelievable ride for owners of SanDisk. Another name that we have a chart on, Seagate. Also storage. Seagate, an amazing run. There you have Seagate's run. Unbelievable. What else has been a hot area? Memory. Why do you need memory? Well, everything needs memory, right? Memory for servers, memory for computers. You need memory. What companies do memory? SK Hynix out of South Korea, and the number one memory company here in North America, Micron. We have a chart on Micron. There you have it. Now, coming on air, Micron was having a bit of a rough day. Stock actually is below $400 a share now. It's been on a tremendous run. Memory prices have just skyrocketed, making it very difficult for computer companies to cope. Names like Dell, Apple, and others stumbling a little bit because the memory chips that go into a lot of these products are now so high. The prices are so high that it's eating away, obviously, at profitability. Last but definitely not least, the third area that is hot is chip equipment makers. These are the companies that make the equipment that produces the chips that we need to go into everything. Our chart here, and we've talked about this stock before, Lam Research. Let's take a look. There's Lam. Unbelievable. But you can also take a look at Applied Materials, ASML. These companies are just through the roof. ASML, European company. Applied Materials, another US company. So these are the hot areas. Well, I showed you the hot areas. What is not so hot? The darling name that we've come to love over the last few years. Let's take a look at Nvidia. Is Nvidia in a bubble? Is it a hot area? Well, to me, that's not the stock or the chart of a hot stock. We also, again, have a one-year chart on Amazon. We can put that up. Amazon reporting earnings after the bell. And Nvidia, I think, reports in a few weeks. So these are pretty hot areas that we've talked about. A couple of not so hot areas. Actually, we have one more not so hot name, which I've already mentioned, and that is Microsoft. Let's show a chart on Microsoft. If you're an owner of Microsoft, oh boy, you've been in the doldrums, and for a little while now, Microsoft hasn't done much in over a year, maybe even a couple of calendar years. So hot areas, you got to know where they are. Should you be buying into them? I probably would tell you no, maybe on a dip. Maybe you want to look at some of these areas that have sold off. And speaking of selling off, our third topic for these list of 3 things that individual investors need to focus on, software, and in particular, the sell-off of software stocks. Software stocks have been the darling for this market for so many years, and all of a sudden, AI has come along, and now people are saying maybe AI and the products coming out of companies like Anthropic and their Claude or ChatGPT or Grok or whoever else, these AI companies are going to produce things, plugins that will replace some of the, I guess, offerings by these big cap software names. And so we're seeing a massive sell-off in software. First chart clearly shows the sell-off in software stocks. Here you have it. It's the pink line. And if you, I guess, relate it to the S&P 500, which is the gray line, you can see the massive sell-off. Some of the earnings we're seeing starting to slow down in some of the software companies. That's our next chart. You can see it here. But I just think that we're grouping, or investors are grouping, many of the software names all together. And the earnings slowdown that we're seeing is not happening in all software companies, but yet all software companies are being thrown in. Even cybersecurity names like Palo Alto and CrowdStrike, these names are down. They're being looked at like software companies, and they are far from it. So does that present buying opportunities for us? Perhaps, and perhaps something that individual investors need to be looking at. We have a few charts on some software names before we leave this topic. Our first one is ServiceNow, a great company, has pretty much all the Fortune 500 companies as customers. Look at how much that stock has fallen. Another very well-known software name, Salesforce. This is your CRM system. They also are involved in marketing and a bunch of other initiatives for businesses. They use AI in their suite of products that they offer, but I just don't think they're being replaced by AI, because you look at their earnings, they've been fantastic. And the same for ServiceNow as well. Take a look at CRM or Salesforce having a really difficult time. The one software name that I've actually exited out of is our next chart, which is Adobe. I do believe Adobe is in tough, and I also do believe that AI can do many of the things that Adobe offers. So that's a name that wanted to show the chart. That's a name that I'm just not too excited about. But overall, I just think the sell-off in software stocks has been overblown. So again, looking at our top 3 things, right? You want to look at, tech stocks this earnings season. We still have a couple of big tech names to go. You want to look at where the hot areas of this market are. Don't think that it's still the Mag 7. Don't believe that the bubble still exists in a lot of these big cap tech names. I just don't see it. And you want to be mindful of software. Maybe it represents a good buying opportunity. And with that, before you make your investment decisions, I think you need to focus on those 3 things.